All right, guys, here is another back test for the month of March. We're winding up March, so we're going to start April back tests pretty soon. This is a 6-month back test on Forex Signals Factory Free. And if you watched the video that I shared yesterday, you know that we tested these guys and these guys. And the biggest reason we did it was because someone had told us that this channel was a copy of one of these two, and I can't remember which channel. I'll have to look. But from what we can tell, they're not copies of each other. Their results are different. They use a lot of the same sort of terms that I see sort of echoed in other channels. Weird things like keep your investment coming, buddies. For some reason, that phrase appears in so many channels, and it just seems weird, like a weird thing. As far as signal format, it looks pretty good. This isn't normally an issue. I like to, keep these as simple as possible. So I personally prefer it when they use SL instead of stop loss. I personally doubt these guys are affiliated with Forex Factory. But having said that, let's take a look at the results. We'll start with March. And as you know, we do a $10,000 account, and we do 0.1 size lots. So you can see for the month of March, we did $406.80, so about 4% gain. Here's what our equity curve looks like for the month. Entries by hours. Again, if you watch the other video on the Forex Factory Signals channel, they trade the same hours, same entries, or same entry hours. A lot of Europe, some US, not much Asia. Statistical scatter plot of wins and losses. Here's our losses down here along this line. So you can see that they tend to be kind of hover along at a fairly consistent level, which is good. And then our wins are on this side. So you can see there's kind of a variety of rewards. A lot of gold. They trade quite a bit of gold. And I think one of the keys is, as we sort of start to flesh out this database that we're building, if you follow 2 or 3 different channels at a time, you don't want channels whose sort of signals are overlapping, or maybe the ways that they take trades are overlapping, right? So like with gold, especially if people trade a lot of supply and demand with gold, you tend to see kind of some of the same entry zones. They're not exact, but they'll overlap, and a lot of the same target prices. So you would want to figure out how to create like a little more diverse portfolio of signal providers. 2 to 3 I think should be sufficient, but that's just my opinion. So let's take a look at February. Again, the same metrics, $10,000 account, 0.1 size lots. And you can see for February we did about $776. Again, here's our equity curve. We did have some drawdown, but definitely recovered. And I think in a case like this, your personal psychology comes into play. I can tell you, we have a lot of customers all over the world, and I would say probably the biggest shortfall of most customers is that they're not willing to just let the system run. They micromanage things, they overdo it, they come up with these weird stop loss strategies to try to protect whatever they've got. And it's sort of understandable, but at the end of the day, you have to let it be itself, and you have to let the money come to you. You can't, if you overmanage it, you'll kill yourself. You just kill off the system. We see that over and over again. I'd say that's the biggest shortfall that most people have. Again, entries by hours. We have a lot of Asia, not as much US, not a whole lot of not a whole lot of Asia, mostly Europe. Similar statistical scattering here as last month, which is not. We like to see that. That's a good consistency. A lot of currency pairs for this month, some gold, but yeah. So let's take a look at October to January. So that would round out our 6-month performance picture. And you can see for the October to January, we did $3,402.80. Again, here's our equity curve for that period. Entries by hours, months. Statistical scattering of losses looks consistent. So we like to, that's definitely something that you want to see out of a signal provider. So let's do some quick math here and let's get a total. So we have 3,402.80 for October to January, and then we have 776.10, and then we're at 406.80. So that gives us $4,585.70. So about a 45, almost 46% gain over the last 6 months. So yeah,